So this deal analyzer became one of my flipping Bibles for the rest of my life. So I'm going to show you, whether you're flipping or wholesaling, how you can use this exact same template. And if you have a different investment strategy, just ensure it takes every single cost variable into account. RPMers, you have access to this, again, in Module 3 under all the other credibility pieces that we give you. So I'm going to break this down into 5 segments. How many? 5. All right. We're focusing on our overall cost at a high level. The way I've created and basically simplified this spreadsheet is I've narrowed it down into 7 cells. That's it. There are 7 cells that you need to fill out in order to figure out whether or not you have a deal. As I take you through this, every time I use this deal analyzer, I come within $500 of accuracy when I'm buying or selling a property. There is an art to how you use this and how you gather the information. I don't care what your realtor says. I don't care what your business partner says. We never take anyone's word. You let the data guide you. So what is the resale value? Let's say right now we're about to buy a property. Let's say it resales for $750,000. All right, here's cell number 1, simply putting in $750,000, enter. Renovation cost is something so many of us miss. It's not just your construction cost, it's everything. If you're flipping a house, for example, we're going to stage that property. We may have an architect, a designer. What is your total all-in cost? That goes in here under line 5. Let's say it cost us $250,000. Well, what am I buying this property for? Sometimes I get them 10% below market value. Other times I pay above market value. Let's say in this situation, I'm buying a property for $350,000. Monthly holding cost is also another big area that many of us, especially seasoned investors, don't get right. So our holding period is not just our construction time. It's made up of 3 variables. It's our construction time, our days on market, which is not a guessing game or what you see when you're driving through a neighborhood, and then 2 additional months for our buyers to get to closing. This is how we calculate our holding time. Now, depending on what's happening in the economy or during an election, maybe you decide on a case-by-case basis, maybe you add 1 more month. We never take the highest days on market or the lowest days on market or the average. We literally look at, there is a script, this is also in Module 3, that you have for how you request comps the right way from a realtor. Realtors believe that they're serving you because they don't know any better. A lot of them have an investor mindset, most don't. So when you call up a realtor and ask for comps, they're going to do their job. They want to make your job as easy as possible. They're going to go through the MLS and they're going to start setting filters and they're going to send you what they think are the applicable comps. But we have a different way of looking at deals, right? So when we request comps, we need to see everything. I need to see active, pending, and sold because I need to know, is inventory moving or not? I want to see photos of every single property, distressed and renovated, because what are my standards as a flipper going to be? I don't want to over-renovate. I don't want to get emotionally attached. I don't care what I like. I'm going to renovate my home, so what's happening in the market? So you decide based upon a complete picture on what that after repair value is going to look like. And we get our days on market from that detailed CMA, comparative market analysis. If everything is coming in at 3 days, 14 days, 20 days, then our days on market is 1 month. It's not 2 weeks. We always round up. If our construction time is 3.5 months, it's 4 months when you're putting it into your deal analyzer. So this is the first section. Now we got to look at financing. Many of you may be working with hard money. We have our preferred hard money lender here, Kiavi. They're going to share some examples of how they can help you this afternoon. They are very investor friendly. Based upon your experience, they may be willing to make some exceptions on how they do deals with you. So let's say you work with a hard money lender while you're getting very strong at raising private money. All right, cool. On average, they're going to give you, let's say, 80%. I know it can be more or less depending on your experience and where you live. On average, a hard money lender is going to charge you 2 to 4 points. Yes, some of you may get 1 point. So 2 to 4 points, let's just put 2 in here. And your annualized interest can be anywhere from 9 to 12 to maybe 13%. Let's just put in 11%. Now, for the sake of this exercise, I normally, when I work with hard money, I don't ever change these cells. I just leave them. Whether it's 75% in 2 points or 80% in 2 points or 11% or 10%, that's not going to make or break my deal. So I really don't care. What's the highest and best use of my time? It's to only focus on filling out 7 cells. These first 4, and then I'll show you the rest. Now, if we're raising 80% in the form of hard money, well then what do you think goes down here for private money, our second mortgage? Ooh, I'm getting some different numbers. This is good. We may be thinking 20, and then we have carrying cost. So I always, by default, I put 110% in here. So if my hard money lender is giving me 80, I'm going to put 30% in here. Sometimes it's 7, sometimes it's 8. That is not going to make or break your deal. Do I offer up points when I raise private money? No. Oh, that is not my standard process, sister. Yeah. When I lend, we didn't talk about that. When I lend, my standard process is I charge points. So when you guys raise money, you don't offer up points. It doesn't matter what they want. It's 0 and 12 based upon your investment strategy. And then that's it. That's the financing portion. Now, remember, simply because I am coaching you through this right now, I updated these 6 cells in white. Normally, I don't touch them, okay? So let's go down here. Our monthly holding cost. Taxes is the next thing I'll update. Maybe it's 200, maybe it's 1,000. In this market, it's going to be around $1,000 a month for us. If you have an HOA, put it in there. I never change my insurance or my utilities. Sometimes it's $100, sometimes it's not. I don't care. Again, $200 is not worth my time to look up my insurance statements. $200, we're done with our monthly holding cost. This is what's so crazy. Attorney fees, I keep because even though I live in Texas, I don't need an attorney to close in the state of Texas. I still like working with an attorney on every single close. You do what makes sense for you. So I'm always going to leave that at $600. I don't have the time to go find an attorney who's going to save me $100 or $200. That is not the highest and best use of my time. Ryan, take $600, you're local, help me out with every single closing moving forward. What is amazing is this. So the title company closing fees. So this is what I started to do. When I was flipping houses at a high level, I reached out to my real estate attorney. So you can do this or you can reach out to a title company. And I said, hey, I don't want to keep guesstimating what my closing costs are going to be. Maybe, is it really 1%? Is it 1.5% of the purchase price? And I know it varies in every single market. I said, just give me your closing cost calculator so I don't have to email you or call you, and I'll just figure that out on my own. And so he gave me this Excel spreadsheet that every title company has. This is not proprietary information. If somebody says, no, I'm not sharing it with you, that's weird. Either we haven't done a good job of conveying to them who we are, or that's just not the right lawyer or title company that we want to work with. The way to approach these conversations is, I want to get back to you as quickly as possible, and the way that I can do that and do more deals with you is just being very accurate and knowing my numbers. So if you can just share that Excel spreadsheet with me, then it's going to help things move along a lot faster. And so I have 2 Excel spreadsheets, one for when we buy and one for when we sell. For when we buy, I plug in in this case, what was our distressed price, $350? Okay, I plug $350 in the top, it spits out a number. Whatever that number is, I put that right here. Title company closing fees. Let's say in this case it's $5,000. Now that captures everything. Wire fees, recording fees, miscellaneous fees, city stamps, just for breathing fees. Like, it covers everything, right? Like, oh, Catherine, you know, girl. So as soon as I started doing that, it was insane how accurate my numbers came. So I do the same thing for when I sell. So when I sell, I have the same thing here. I keep my attorney fees. Now, depending on your closing cost calculator, it may already have attorney fees baked into there. So just make sure you're not double counting. Now, when we sell, I do the same thing. I plug in my after repair value. So in this case, $750,000. It spits out a number. That's my closing cost to sell. But remember, the closing cost calculator for when you sell also has realtor commission factored into that. That's a significant chunk of your projected profit, so make sure you're not double counting there as well. So I just deleted it from my closing cost calculator because I just like to see it on my deal analyzer. It's 5% because as investors, we're doing more than 1 to 2 deals, so it's just understood. This is not a point of negotiation. I think you guys know that. It's 5% every time we sell a property. I know some of you can get 4. Cool, that's up to you. Just put whatever your realtor fee is right here. And again, because mine are always 5, I never change it. So for me, I update these 4 cells. I scroll down. I update my taxes, that's cell number 5. I update my closing costs, that's cell number 6. And then I update my closing costs to cell, that's cell number 7. That is all I do. This is how I can analyze a deal in less than 2 minutes when I have the right type of a CMA. I'm not a realtor. I'm not a licensed agent. I don't want to take the time to get my license. I like to work as little as possible and make as much possible. I'm very streamlined. But I have an amazing realtor who I work with who gets me what I need within 30 minutes in the format that I need it. And once you find your realtor who is investor friendly and gets you, there is a time and a place to have the conversation with them to say, hey, can you just start sending me deals within my buy box after you fill out my deal analyzer based upon the CMA that we have created together? But there's a way to articulate that to them to where they're excited about it. And again, it's just a matter of, I can't analyze 15 deals a day. I don't have time for that. But if you send this to me, I know exactly what I'm looking for. I'll tell you within a matter of 60 seconds whether or not that makes sense for me. Don't do that on your first deal. Now, this is what's so crazy. I have no idea what's going to happen at the bottom. Okay, so let's take a look at this. I have a lot of investors I work with who would love a $20,000 profit. On my first property that I shared with you yesterday, my first flip in Chicago, I net around $25,000. But look at the net ROI as a percentage of the deal. It's not even 3%. This is what you want to look at. This is huge. Moving forward, never do a deal unless you look at the net ROI as a percentage of your profits. Every investment strategy is different. So I can speak to flippers, people who do new construction, even wholesalers. When I first started flipping, I looked for a net ROI. My goal was 15%. I wasn't obviously consistent with that because I get caught up in the dollar return. Now that I know my numbers, my general contractor is my business partner, I'm okay doing a deal all day long at 10%. Even today, though, if that net ROI is 9.9, I'm not doing the deal, or I will go back up. I remember my mom telling me, don't get emotionally attached, don't force it, remember what your mentor told you. Or I'll go back up here, and I have to figure something out, either reduce my purchase price with the seller, or reduce my construction costs with my contractor, or figure out a way to reduce our holding costs. Something has to change in order for me to get that number at 10% before I buy it. So this is one of my credibility pieces. When I talk to a private money lender, there is a time and a place. For me, usually it's after the 3rd meeting that I'll take them through this. And if I don't have a deal, if you're newer and you're like, but I don't have deal flow, okay, fine, but you know how you are analyzing deals. You have some sort of a deal analyzer, so just educate them and say, hey, as you know, we're always looking for new opportunities. All of our deals right now have been fulfilled. We're not looking for private money on a specific deal right now, but here's how we underwrite our deal. So when I come to you with the right opportunity, we'll decide whether or not it makes sense. Whether you're doing RV parks, self-storage units, multifamily, syndications, funds, whatever, you all have your own version of a deal analyzer. So knowing your numbers and being able to underwrite is very important. So when I sit down with a private money lender, I show the question was, do you show all these cost variables to your private money lender? Yes. I even show them my projected net profit because all that's going to do is instill more confidence in them that you know what you're doing. Hey, private money lender, look, I've taken into account every single cost variable, all my closing costs, my cost of capital. I'm conservative on all my numbers. I really know my numbers. Worst case scenario, I just make a smaller profit if we don't sell for $750 or we have to price drop to $725, right? So hopefully that's the worst case scenario, private money lender. I show them this, and not once, even on our triple-digit flips, have PMLs been like, oh, you're making 100 G's? I'm going to want a point, or I'm going to want an extra percent. Nobody cares because they're happy with what they're making, and more importantly, you set your standard process with them.